all getting a bit older, and with that comes questions. Why is my neck shot after sleeping on it wrong? Why can't I stay up past 11 without needing a full recovery day the next day? And some of you may even be asking yourself, I'm an adult now. Do I really need life insurance? Let's answer that together right now. I'm Kirby, and this is Rich Girl's Guide. Real quick, this is not financial advice and should be used for entertainment purposes only. Now, I am not going to do a deep dive into all things life insurance today. That is a large topic that I would need to do a whole series to dissect. But I will give you the quick and dirty on all things term life insurance, which is typically the better and cheaper option, especially for young people. First things first, what is term life insurance? Essentially, you are paying a small amount of money to an insurance company over a set period of time, let's say $10 a month for 20 years. And in the event that you pass away in that 20-year time period, the insurance company will pay out $100,000 to your beneficiary. A beneficiary is just someone that you designate to receive the life insurance proceeds in the event that you pass away. The pro is that the payout far exceeds the cost. Over the 20-year period, you are paying just $2,400 total for the possibility of a $100,000 return. Of course, you won't be the one seeing the money. Life insurance only pays out when you die, but your beneficiary will see the money, which is the whole point of term insurance. The con is that after that 20-year period is over, if you are still alive, you are out that $2,400 that you paid to the insurance company, and your beneficiary never receives that $100K. But you are alive, so that's a pretty good consolation prize. Now that we know what term insurance is, let's determine whether or not you need insurance to begin with. I like to think of it in terms of, if I pass away today, right now, will I be creating a financial burden for anyone in my life? If so, can that burden be covered by money I am leaving them through retirement accounts or investment accounts? Or will that burden be more than whatever I'm leaving behind? You may need insurance if you own a home that has a mortgage, you have young children or other dependents that depend on your income, you have a spouse that depends on your income, you provide childcare for multiple children in your home, or you have a business/business partner that may potentially need to be bought out. Let's go through each of those scenarios. If you have a mortgage on your home and let's say you have a family that depends on all or part of your income to pay that mortgage each month, if you would like your family to continue living in that same home in the event that you pass, you may consider getting enough insurance coverage to completely pay off the mortgage. If you have a $200,000 mortgage left, maybe term insurance of $200,000. On the flip side, if you are single with no spouse, no dependents, and you are just planning to leave your home to your parents or a sibling in the event that you pass, you really don't need term insurance to cover a mortgage, even if you do have one. Your family could just sell the home and split any profits they received, especially if nobody else is living there. Moving right along, if you have young children or dependents that live in your home and they depend on your income for food, clothing, rent, potentially even college, it is definitely a good idea to have term insurance. This would essentially cover the gap in years before the kids can fend for themselves while allowing a surviving spouse or guardian to pay for their needs without having to take on a second or a third job, take out any loans, empty retirement accounts, etc. On the flip side, if you have older teens that are going to be out on their own soon, they have either opted not to go to college or maybe they already have a fully funded college account and they don't necessarily need a ton of extra money in terms of childcare or expenses, then you could probably get away with not having term insurance. Now, this is the same vein with a spouse. If you have a spouse that either makes a lot less money than you or is a homemaker, meaning they rely heavily or completely on your income, you may want to think about getting term insurance to help supplement their everyday living expenses in the event that you pass. Of course, they can always get back into the workforce to help supplement their own lifestyle, which I already know some people are going to point out in the comments. But unfortunately, many spouses find it hard to get work again after being out of the workforce for a number of years. The flip side here would be if you and your spouse are on the older side and you already have enough retirement savings that your spouse could start to draw from, then insurance is probably not needed, depending, of course, on the size of your savings and the expenses of your spouse. Now, this is one that gets overlooked quite frequently. If you are a stay-at-home parent and provide hours and hours of childcare services each week to your own children, you very well may need some insurance. In the event that you pass, will your spouse be able to afford paying for the childcare you were providing? For context, when both of my girls were in full-time daycare a few years back, that set us back about 26 grand a year. And that's just for 2 kids, not including any kind of babysitting on the weekends or extended hours at daycare. So just because you don't contribute to the family financially does not mean your absence won't create a financial burden. Last but not least, if you own a business with a partner or you own your own business, I would definitely reach out to a financial advisor to figure out how much and what kind of insurance you might need. While term insurance can be less expensive than other kinds of insurance, a couple of factors will obviously change the price: your health status, your age, and even your gender. According to according to a Nerd Wallet, quote, the average cost of life insurance is $26 a month. This is based on data provided by COVR Technologies for a 40-year-old buying a 20-year, $500,000 term life policy, which is the most common term length and amount sold. So as far as getting the best bang for your buck, term insurance is the way to go in my eyes. If, however, you are trying to tie your insurance into your estate planning or retirement plan, which I will just say from experience working with high-level financial advisors, the advisors themselves pretty much never offer these policies. 99% of them will get term insurance for themselves. Just food for thought. But if that is the case, you want to tie it into your estate planning, then you may want to look elsewhere since you're not going to be building equity in a term policy. All right, guys, hopefully you have a better idea of whether or not you need term insurance. I wanted to keep this episode short and sweet, so I really did not go into much detail about how much insurance you would actually need. If that's something you have a question about, please drop a comment below or shoot me an anonymous message through the link in my show notes. I will catch you on Monday with a brand new episode. Later, rich girls.